While all eyes are now on the MSCI, which is due to make a very important decision later in the day today on whether or not they will include China A shares in their emerging market index. Mangala Malu is here to tell us what we can expect.
Well, before I start, so MSCI usually reviews its country classifications as developed, emerging or frontier standalone status each year. So this year China A shares are under review for inclusion into the emerging market index. So MSCI in its review to consider whether to add China A shares to the EM index. Now this decision will be announced not later today but earlier in the night, early morning, 2 a.m. Indian Standard Time or 11 p.m. the Central European Summer Time. Now Hong Kong Shanghai Stock Connect opened the doors for investors to invest in China earlier, because of which now China A shares, which are shares listed on the mainland China based companies will that trade on Chinese exchanges, will now be eligible to be added in the EM index. Now 74% of China's total market cap comprises of these A shares. Now if all of that are added in the EM, the other indices could see reduced weights and outflows at a much higher level. So to minimize that volatility, India's weightage, which is currently at 7.49, will go down to about 7.13 once China A shares are included in that. Now Credit Suisse has written on that, and they do not expect the MSCI to confirm the exact date of the A share inclusion, and they also do not rule out the chance that the A share inclusion will happen before the end of 2015 for inclusion in Feb 2016. So this will enable the implementation as early as November 2016, their semi-annual index review. So potentially we could see, in case China A shares are listed, potentially we could see outflows of about $1 billion from the Indian markets. And the top weights on the MSCI index in the Indian markets, something like an HDFC Bank, Reliance Industries, Infosys, all of them have the maximum weights. So those shares could see some taking down.
Yes, indeed. Thanks, Mangalam, for that. Though the street right now is still very divided on whether, at least in this June review, the China A shares will be included. Though they do believe that as and whenever it does happen, it will be a very gradual inclusion. So as of now, in the first step, it could only be 5% of China's free float, which could be included in the MSCI emerging market. But that said, whenever it does happen, it will be negative for other indices like the Taiwanese, India as well. All these are part of the emerging market basket. But thanks, Mangalam, for taking us through that.